Ada grup yang tak sampai lagi ke? Mana ada? Doa, Afan? So, as usual, we're going to look at the syllabus content. So, Alhamdulillah, on track, Wednesday. Now, we are going to discuss a today console. Inshallah, as I said, yeah, your mock exam 1 only up to statement of cash flow. Saya dah bagi tahu Sa'anas pun, ya, dah discuss dengan Sa'anas. Tak ada. Mock exam week memang tak ada kelas. Okay. Follow yang ni lah. InsyaAllah next on the 16th tu, I think for the first time lah, second time, first time. Kelas kita yang Monday yang 3 hours kan. InsyaAllah going to finish everything the following after mock, debriefing, and revision phase, and final. Okay. This is workbook. So we start with chapter 7, Introduction to Groups. Okay, this one is on interpretation. Okay, I suppose that you have during your previous paper, FFA or diplomas, we have an introduction of groups, financial statement, but with simple information, of course. And then for me, the additional transaction or additional knowledge that you need to add for FR is not that much. Cuma dia dah start ambil syllabus from SBR turun to FR. Meaning that from time to time I nampak syllabus daripada SBR tu bertambah, and then dia tak tolak pun, dia tambah, and then some of the syllabus from SBR dia masukkan dekat FR. Bertambah juga, dia tak tolak pun. Maksudnya dia tak ada exclude any of the other items, So itu yang I tengok from year to year. Okay. So maybe generation dia makin lama makin pandai lah kot. Kan? Alhamdulillah. Okay. So now introduction to groups. As if you have the basic knowledge, so just for a quick recap. So this is when entity A, so they intend to become an investor. Entity will become an investor. Kalau individual dia lain. Now entity become investor for entity B, for example. So this one is an investee company. Okay. So in this case, entity A bought or purchased shares of entity B. All right. And in your syllabus, the share can be, let's say, from 1% to 19%. If 1% to 90%, this is, we call this as a simple investment. If it's simple investment, it is just investment in shares. Will be treated as investment in shares. Which accounting standard investment in shares? Accounting standard? Yes, IFRS 9, yeah, financial instrument. So this is financial asset. So it will be accounted as financial asset as usual. So if investment in equity for financial asset, what will be the accounting treatment then? If it's a financial asset, accounting treatment dia apa? Amanina. Financial asset, you need to identify first, either it is equity or debt kan? Investment in debt or investment in equity. Now it is an investment in equity. So investment in equity, by default, it will be initially it will be measured at fair value, okay, plus transaction cost, if any. Mana you tahu dia plus transaction cost, bukannya tolak transaction cost. Ilyas? Transaction cost untuk financial asset, investment in equity. Dia tambah transaction cost ke tolak transaction cost? And how are you going to know that? Tu cakap, masa dulu kita discuss just that, meaning that we focus on that accounting standard previously. Dia mudah aja. Tapi when it comes to, now we move on to other topics and this is related. When we purchase, there will be cash outflow. When you need to pay transaction cost, it is also cash outflow. So sebab tu dia tambah transaction cost. Kalau you issue debt, you akan dapat duit cash inflow. And then when you purchase, when you need to pay transaction cost, itu cash outflow. Sebab tu kalau financial liability, fair value tolak transaction cost. So that is how are you going, itu understanding. Bila understanding kat final, bila you lupa, and then you go back to the principle tu lah, yang understanding. Jadi kalau ingat, dia boleh lupa kan? Tapi kalau understand, insyaAllah lah. Yeah, sebab you're going to hold that for long period of time lah. So then, Amanina, macam mana dia punya transaction, initial I dah bagi, and then subsequent by default. Subsequent, it will be measured at fair value through profit or loss, unless the company elect to measure at FVTO CI, and the election is irrevocable election, meaning that they cannot revert back, they cannot change back to FVT PL. Alright. So apa yang ada dalam understanding I ni, untuk you faham tu dia tak ada lainnya, dia kena yang sama. You faham maksud I kan? So the things that in my mind sekarang ni, you need to bring that the same understanding to the final exam. Dia tak ada yang lain pun. Ini you need to cakap continuous. Bila you tak start from now, dia ni lah. Ya. Susah sikit lah nanti kan bila nak revise. So come back to this one. 1 to 1%, 0.1% lah kan. That doesn't mean that it need to be 1%. 1 share to 19% shares. It will be considered as simple investment. And then from 20% later on, we will discuss 20% to 49%. This is investment in associate. This is in your syllabus. We are going to discuss on this one. Associate, all right? And more than 50%, then this is an investee company, is a subsidiary company. Okay. So what we're going to discuss first is on this part, yeah, the subsidiary company, and we also going to look at investment in associate between 20% to 49%. Okay, later on when we discuss the principle of subsidiary and parent company whatsoever, the percentage is bukannya major part ataupun the things that you need to focus. There are the principles that you need to follow. Dia bukan by default more than 50%. automatic control? Normally yes. Ya, cuma prinsipal dia lain sikit. Dia bukannya based on percentage. Dia based on criteria. Okay? So now, this one you have covered previously. So like I said, this is the thing that we are going to cover in this topic. And when it comes to this, when investor company purchase more than 50%, then this investor or entity A, we call them as a parent company for entity B. So this is the relationship between parent and subsidiary. So the accounting standards, FR3 actually, a consolidated financial statement requires that if investor company obtain control or held more than 50% share, so they need to combine the account of individual account for parent and individual account of subsidiary. It need to be combined together and we call it consolidated financial statement. To console itulah combination. Right, and that after that combination, dia akan jadi single economic unit. So meaning that just one financial statement. Yeah, you become one financial statement. So that will be the concept. Then we are going to look at definition of subsidiary. Ini yang cakap yang dulu tak ada ni. Ya, dulu F7 masuk FR sikit, ya, the previous code. Terus belajar konsol je, adalah sikit untuk subsidiary tapi not that much. Okay. Dia banyak technical di masa tu. So now dia masukkan banyak prinsipal ke dalam FR. Okay. So we will look at definition of subsidiary. We will understand them dan tengok dia punya scenario. And regulation identify outline the circumstances group required to prepare consolidated financial statement, because there is a situation whereby the parent company may not require to prepare, or the investor may not require to prepare consolidated financial statement. And then there will be an exemption as well to prepare consolidated financial statement. And there will be also an issue why director don't want to consolidate. Yeah, one of the thing is when the subsidiary is not in good performance. Ya, ada satu subsidiary negatif, loss lah kan, loss making company from year to year. Console je reduce the profit for the group. Itu that one of the reason. Kita akan tengok macam mana nanti. Explain the need for using coterminous year-end and uniform accounting policy. So maksudnya yang ini lebih kepada konsistensi lah ya. Consistent and uniform accounting policy, because it is difficult to, for example, parent end at 31st December and then subsidiary and at, let's say, April, yeah, on 30th April. So financial statement in different timeline. So this selalunya sama in your case. No worries. And then explain the objective of consolidated financial statement. And last, prepare. Tapi prepare ni lah yang paling panjang. Okay, there will be a flow of process in preparation of consolidated financial statement. So as usual, this topic can be asked in section A or B, tak kisah pun, or 20 mark question in section C. So because yang besarnya dekat section C, you ada publish, you ada cash flow, you ada console, and then publish dua-dua tu lah the whole things lah daripada profit or loss to statement of financial position, and cash flow, and then you ada console, and then you ada interpretation of financial statement ratios. So 4, tapi selalu keluar 2 je. Ya, keluar 2 je, meaning that either one, publish cash flow, cuma yang quite yang frequent ratio. Selalu sangat question 32 tu ratio. I ask your previous sebelum ni, sitting sebelum ni pun ratio. Yang recent tak tahu. Ya, yang masa apa ni ada repeaters, masuk repeaters ya. Sebelum tu ratio. Ya, interpretation of financial statement. Itu yang selalu examiner test. Then acquisition of another entity, I won't go long for this one because basically I dah bagi tahu tadilah ya, acquire sole trader. Dia boleh acquire sole trader, acquire partnership, ya. So basically this is line by line accounting. Maksudnya acquire individual asset and liabilities. They are not acquire share. They are not share acquisition. Yang ini lebih kepada asset acquisition. Okay. Normally this is asset acquisition. Okay. Kalau acquire company, this is the thing that we are going to focus. We are going to acquire shares. Right? When acquire share, there will be a percentage of control. There will be an investment that we need to take into consideration. Okay, and this investment will be recorded in parent separate financial statement, and also not subsidiary. Both before consolidation, they are separate entity, and then they will combine together as a group financial statement. All right. So this is the thing that I already explained, subsidiary control. You're going to do full consolidation, associate, significant influence, but we need to know the detailed criteria on how to determine significant influence. Equity accounting, we are going to discuss equity accounting as well. And investment, which is none of the above. A creation of wealth, simple investment, yang cakap tu. Simple investment, and this will be accounted under IFRS 9. So investment in equity instrument. For group accounting, first, in order to determine whether the entity is a subsidiary company, this start as ni. Ya. Maksudnya parent tadi entity A, maksudnya entity B controlled by another entity. Meaning that entity B controlled by entity A. But how are we going to determine that there will be a control? Here, entity B obtain control. Sorry, entity A obtain control. Then we need to understand the definition of control. Okay. Control, dia ada 3 kriteria. Exposure right for variable return. 1, an ability to affect to those return. 2, and also they have power to direct relevant activities. Sebenarnya dia masuk sekali. Ya, power to direct, ability to direct relevant activities. I tak tahu kenapa dikeluarkan sebab ini breakdown of the definition je kot. Then parent company, entity control subsidiary, group parent and all of its subsidiaries. Yeah, of course, in the industry, when you look at this number of subsidiaries, if it's a big company, it will be hundreds of subsidiaries. Yeah, and then associate later on. We will, when the investor has significant influence over investee. Itu nanti. Bawah tu significant influence. So now go back to entity A and entity B. With the prior understanding that we know this is parent company and this is subsidiary company. But other than 50% percentage, yeah, this is just for measurement rule of thumb. But basically, in order to identify control, to know whether entity A have control over entity B to become a subsidiary, they must fulfill these 3 criteria. So saya cakap tadi, control ni ada 3 criteria, yang tadi itu just breakdown on the definition. I pun tak agree kenapa dikeluarkan control tu dekat second definition. First, entity A has power to direct relevant activities. Okay, kalau parent company held 50%, for example, in actual case scenario for sure, contohnya, all of us is a parent company shareholder. Shareholder untuk parent company, and then we elect directors based on our own requirements. Of course lah, on our own behalf. Shareholder, dia tak direct terus relevant activity of the company. Nampak tak? Dia akan appoint executive director, and that executive director need to act on behalf of the shareholder. Faham? Okay, sebelah sini shareholder, sebelah sini executive director or parent. Okay, tapi parent pula sekarang ini adalah investor to subsidiary. Yang 4 tu belakang subsidiary. Yeah. This one investor of parent. Ini ultimate investor tau. Ultimate shareholder. Macam Petronas contohnya. Petronas tu dia ada ultimate shareholder Petronas. Petronas juga, Petronas dagangan dan semua tu parent company, dan ada Petronas yang kecil-kecil lah, all the subsidiaries tu. Ya, macam tu. So you ultimate shareholder to the parent company. And then parent company beli share to subsidiary company. Again, walaupun parent company is an entity, dia tak directly involved pergi meeting dekat subsidiary company, and then okay, you buat macam ni, no. So parent company will elect directors juga. Itulah 4 director kat belakang tu. And then the 4 director tu will manage the subsidiary company. Dan selalu director tu majority, contohlah 100%. So 4 orang tu dia memang on behalf of the parent company. Dah. Setiap decision made will be on behalf of the parent 100% lah. Itulah power to direct relevant activity. Tak ada air. Hilang sangat Tapi nak bercakap juga kan. Sedih Kalau kawan bolehlah minta air kan. Cuma faham apa yang cakap tadi kan. Ya, maksudnya power to direct relevant activities ni bukannya terus parent to subsidiary. Ya, quote unquote macam parent to subsidiary tapi through the directors. Faham? Okay. And then saya cakap je lah, dengar je lah walau macam suara saya. Kita tak ada masa dah ni. So this is the example. Yang ini yang obvious voting right. If it's more than 50%. Contoh dah nampak 4 orang yang on behalf of the parent. Buat decision je, agree 4 dah 100%. Okay. Contohlah 3 orang je pun, seorang bukan. Maksudnya seorang tu 33% are the investor. So 67%. Vote je dah 67% untuk 3 orang. So done. This is on behalf of the parent company. Ini yang dalam satu tadi, right to appoint, reassign or remove key management personnel. Itu yang appoint director tu. Alright? Right to appoint or remove another entity that directs relevant activities. Ya, maksudnya yang ini lebih kepada parent, dia dah tak ada dalam syllabus you all, termasuk dekat SBR, subsidiary and sub-subsidiary. Maksudnya ni boleh direct relevant activity. Tapi parent is ultimate, dia boleh instruct not to direct relevant activities. Yeah. And last will be decision making. Ada mineral water tadi, wifi yang ambil. Dia buat macam ni. Ingat dia nak salam, dia nak mineral water. Tapi salam lah, lepas cukup. Sorry Umar So next, exposure or right to variable return. Okay, now, let's say they held 60%. Exposure. If it's loss-making subsidiary. So they are exposed to this loss. Tak ada dividend. Whole 60%. Loss-making company, dia takkan declare dividend. Exposure selalunya kita relate dengan risk lah. And exposed to risk ataupun changes. And normally we refer to profit. Itu exposure. Rights pun, kalau profit, kalau declare dividend, dia dapatlah 60% of the dividend, declare. Yeah? And variable returns ni adalah fluctuation of profit. Yeah? Normally, this is through the dividend lah. Bawah tu. Ambil satu pun dah cukup lah. So now entity A dia ada power to direct relevant activities. Entity A dia ada exposure or right to a variable returns. And entity A juga boleh also can have the ability to use power to affect amount of return. This one normally through dividend policy. For example, let's say from the amount of profit, policy dia 10% untuk dividend. And then parent company instruct, they have good cash flow and everything, so they increase to 13%. Or they can reduce, sebab dia nak save tax, yeah? Sebab the dividend ada tax, okay? They reduce to 7%. And 3% they reinvest for more shares, for example. So macam-macam strategi company. So dia boleh affect the amount of return through the dividend policy. That's why in the actual case scenario, even though they held less than 50%, tapi tak adalah sampai 20-10%, selalunya between 40 to 50, yeah, around that range. Walaupun bawah 50%, but they still consider as parent company to the subsidiary because the mutual understanding between shareholders saying that entity A, they have these three criteria. Yeah, but normally they will agree amongst the shareholder. Ada mutual understanding. Contohnya, selalunya one shareholder, the entity A held 45%. But the other entity tu dia held 5%, 2%, 1%. So less than significant shares. So it is difficult for them to, what we call that, to change decision without involvement of entity A. Selalunya macam itulah, ya, dia punya situation. Terus je kita buat yang ini. Later you boleh, oh ni apa ni, dia multiple choice ya. Requirement which investment will be classified as subsidiary of Alpha. Alpha acquired 4,000 of the 10,000 equity voting shares and 8,000 of the 10,000 non-voting preference share in Crofton. Alpha acquired 4,000 of the 10,000 equity voting shares in Element and had signed agreement giving the power to appoint or remove all the director of the Element, both 40%. Okay, Tapi kriteria control tu penting. Ya. Sebab ada je 40% ni automatic exposure and rights to the returns tu dah ada. Sebab dia dah based on percentage of share. But what make in this statement to tell that it is a subsidiary company or not a subsidiary company? Which statement? Power to appoint or remove all of the directors. So maksudnya dekat sini, which investment will be classified as a subsidiary of Alpha? Sebab yang first tu acquired 4,000 of the 10,000 voting shares, 40%. And 8,000 of the 10,000 non-voting preference share in Crofton. 8,000, walaupun dia acquire 10,000 pun, but there will be non-voting participant. Maksudnya dia tak ada power to change decision. Understand? So in this case, only element will be considered as subsidiary company. So elemen kan betul? So even this is the example, even though there is a 40%, but there is a mutual understanding, sign agreement. Dia mesti sign agreement, dia tak boleh tak ada sign agreement. Ya, kalau tidak, the power tu tak boleh nak exist. So, cuma bezanya workbook is much better than course notes previously, or even dulu-dulu lagi lah tak ada course notes and workbook. Ada revision kit dengan study text sahaja. Yeah, because I remember I need to draw financial statement for parent and subsidiary for the student to explain this one. Tapi yang ini dia dah buatkan untuk you all. Okay? Easy for you to revise. Of course, before consolidation, parent will prepare financial statement on its own as usual. When parent acquire share, yeah, in example, parent company acquire shares in subsidiary, what would be the double entry? The accounting treatment. In parent separate financial statement. Adlina. Debit. Bila dia acquire shares in subsidiary company, acquire share, tapi ini parent its own financial statement, dia beli dengan cash je lah, senang. So credit, cash. Any amount. Debit. Beli share. Bukan, ini financial asset. Dia debit apa? Dia bukannya issue share. Kalau dia issue share, dia akan credit OIC. Yes, debit investment in shares. In shares, and oftenly dia kat sini dia tulis investment in subsidiary. Dia masih lagi investment in share macam biasa. In the separate account masih lagi financial asset macam biasa, tak ada different pun. Cuma share yang dia beli tu banyak lah dekat subsidiary company that lead to parent company obtain control over the subsidiary company. Okay, first yang ini. And then whatever value here, in the parent separate financial position, parent company can carry this investment. For example, let's say they purchase at 100 million, 100,000 lah. And they purchase at 100,000 cash. So they can carry the investment in separate account at cost. Assume in this cost lah, senangnya. 100k je lah. Yeah, maintain at 100k. Tapi in the future, sebab saya cakap in the future, sebab dia tulis ACCA FR exam. Yeah, in the future, it can be carried at fair value juga. So maksudnya, if the fair value increase to 105, for example, so you will record at 105. Cuma masa cari goodwill, 5,000 tu you akan letak tempat lain. So macam mana pun dia akan based on the date of acquisition, masa dibeli je. Ya, masa dia acquire at first tu je, 100 million tu. And then, dia can carry at equity accounting juga. Maksudnya, 100k, maksud investment 100k, tambah post profit. At any amount lah, tak kisah pun berapa. So dia akan ada 100k plus plus. Yeah, but this one is only for investment in SOC. Okay. But as I said, even though there will be 3 options for parent separate financial statement to carry this at fair value, equity method, or at cost, in your exam, it is always be carried at cost, easy. Tak ada further adjustment. So macam ni lah. When they acquire, Porters acquire Sinus for how many percent, we don't know. So they will debit investment in Sinus, credit cash, it doesn't matter lah tapi Sinus punya financial statement will maintain as it is sebelum konsol. Ini yang penting. Why this is important? Because some of the question is saying that the company have yet to record investment in subsidiary. So maksudnya kalau dah record, senang. Terus consolidation process. Kalau belum record, you need to make an adjustment dulu. Tolak cash dulu, for example, baru konsol. Then there will be marks lah dekat situ. Okay? Macam incomplete record. Incomplete record lah dalam you punya chapter yang dulu. So the rest you don't have to worry. Ini dia punya explanation. December year 4, Porters purchase 100% for 30.8 million. It show investment at cost. Yeah, in cash. So that would be the understanding. Now we move to the group financial statement. So once it is parent to the subsidiary company, so they need to prepare consolidated financial statement. Additional set of financial statement. Later on, when you look at the annual report, you akan nampak, let's say, untuk parent company ABC Group, dia akan letak kat sini individual parent company, yang dekat sini console. Dia akan tulis group, tak mistaken. Ya, tapi dia ada 2 tahun lah, year 2 and year 1, year 2 and year 1. Which one on the left or right side, dah lupa, lama tak tengok annual report. But this is the understanding. So sebab tu dia bagi tahu additional set of financial statement known as consolidated financial statement. Okay. Yang ini untuk features of the consolidated financial statement, better kita buat konsol baru baca ni. Ya, sebab ni proses. Proses dia susah nak visualize sebelum you buat betul-betul. Ya, kira goodwill, combine the accounts, barulah tengok. Sebab all things ni, present result financial position, group company as a single entity, and then issued in addition to and instead of the parent's own financial statement. So ini pun dia macam word that you need to interpret further. Tak perlu. Goodwill, this is the formula of goodwill. I suppose that will be very similar. Sebab FFA dah ada kan? Okay. Consideration transferred. But they may be another items under consideration transferred. I don't know about your FFA previously, tapi tak apa, kita from scratch je. Sebab consolidation transfer commonly dia cash, kan? Tapi dia boleh juga equity, dia boleh juga hutang, liability. So itu later kita akan buat, okay? And non-controlling interest, if it's less than 100%, so there will be non-controlling interest on the remaining balance. So non-controlling interest can be measured at fair value or not measured at fair value. Later we will look into this matter in detail. And parent company also need to measure asset and liability of subsidiary at fair value. Then tolak. And then for goodwill, the accounting standard requires annual impairment review. Yeah, and ni pakai IAS 36 lah. IAS 36 cash generating unit. Apa cash generating unit? Yes, Farisa. Dah macam ni tangan ini, teruskan je lah. Ya. Situ pula. Masa tu pula kata-kata mata Farisa ni. I tak sabar apa bercakap tu. I tahu, maksudnya bila asset that is dependent on or not dependent, ya, dia asset that can generate cash flow independently, cukup lah. Ya. Tapi kalau that asset cannot generate cash flow independently, asset A, and they need asset B to generate cash flow, maksudnya A and B gonna be cash generating unit. Termasuk asset C, tapi yang ini subsidiary as single cash generating unit. Sebab dekat dalam subsidiary kan ada goodwill, kan? Ada non-current asset, ada current asset. So that will be the computation of annual impairment review. Not to worry, tak pernah lagi keluar dekat FR on subsidiary. Dia terus bagi impairment tu berapa persen. Dia tak suruh you calculate from scratch. Ya. So tapi you kena ada lah that kind of understanding juga. I cakap tak pernah ada lagi ya. Ada disclaimer juga kat situ. So now consolidation process terus buat, tapi dia kata goodwill dekat sini. Requirement, prepare the consolidated statement of financial position of the Porters Group at 31 December year 4. Okay. Dia bagi method, cancel the investment in Sinus Company in Porters Book with the shares and reserve at the date of acquisition in Sinus Book. Any different is goodwill. So ini pun sama. Bila you read, actually you need to prepare the workings dulu. Kat sini ada template, working template, kita pakai yang ni je. Okay. Dalam exam, first you need to look at the group structure. Exam, First, group structure. Group structure meaning that the percentage of shareholding. This is the only information sometimes it is not given at the beginning of the case scenario. For example, ni dia bagi terus 31 December year 4, dia bagi all the statement. Kat bawah baru dia bagi on 31 December year 4, Porters Company purchased 100% holding in Sinus Company for 13.8 million in cash. So maksudnya group structure, Porters acquired Sinus 100%. It is a 100% subsidiary and it was acquired on 31 December year 4 year end. Right? And then basically, even though at year end, parent and subsidiary need to be combined. A consolidation process need to be started at this point. Yeah. So maksudnya sekarang you kena add parent and subsidiary figure, PPE 56,600 plus 16,200. Yeah. And then investment in Sanus, ini akan masuk dekat goodwill computation. So kita masukkan dulu investment in Sanus 13,800 kat goodwill computation. Ni kita dah buat group structure tadi 100%. 13,800. Nah, ini jawab. Inilah kalau ada salah apa-apa, dia terus bagi tahu NCI tak ada 100% acquired. So nanti kita tambah yang ini PPE goodwill data, inventory tambah, trade receivable tambah, cash tambah. Okay. Share capital, no matter what, only parent company will be included in the consolidated financial statement because subsidiary company is always going to be transferred to goodwill computation. Always, ya. So maksudnya adalah telajak seorang dua, contoh mungkin tak datang hari ini, dia tambah juga 8,000 tambah 2,400. Ya. So only 8,000 will be in the console and 2,400 in the goodwill. Masukkan. Okay. And then reserve. Normally, the question will start like beginning of the year acquisition or prior year acquisition several years back. Yeah, but in this question, they just want us to concentrate on the simple consolidation process and no working for retained earnings. Sebab they acquire on these accounts is on 31st December year 4. Parent company acquired on 31st December year 4. So we need to have retained earnings at acquisition. And this is retained earnings at acquisition at 31st December year 4. So maksudnya semua masuk dalam goodwill. Ya, selalunya contoh kalau dia bagi 31st December year 5 contohnya. Contohlah retained earnings dah ada 20,000. So dekat goodwill masih lagi 10,600. So the rest will go to the parent financial statement. Maksudnya 20,600 lah yang ambil, senang nak tolak Contohnya on year 5 ada 20,600. So the 10,000 tu will go to the retained earning parent or reserve parent. Tapi tahun depan lah. It is not the issue in this example. So just nak kira goodwill je, 10,600. So that will be 8, itu je yang ada. And then this one going to be 12. 13,000 ya. Then goodwill is 800. Itulah. So itu je. Yang ini kalau kita buat side by side pun okey. Tak perlu nak ni. Long term borrowing tambah and trade and other payable pun tambah. In this case, reserve kebetulan untuk soalan ni je hanya reserve parent sahaja yang akan masuk. Sebab reserve subsidiary itu dah masuk dalam goodwill computation. Understand? Boleh? So it's still straightforward yang ini tapi penting. Okay, I'm not going to go through this one. I'm not going to ask you to do this now. Yang ni later lah sebab dia tambah je kan, parent tambah subsidiary. So you just agree with this figure later. Parent tambah subsidiary, goodwill dah cari tadi 800. So inventory pun sama, parent plus subsidiary. Cash. Share capital, parents only. Working pun buatlah working reserve ni. Sebab apa? Per question Parent 15,600. Yang ini 13,000. As per question, 10,600. I tahu I main tulis je, tengok balik. 54,100. Yang ni. Siapa yang tiru tu kena padam lah. 54,000 yang percaya bulat-bulat kan. So pre-acquisition ni sebenarnya semua yang masuk dekat goodwill. Year end 10,600. Pre-acquisition pun 10,600. So tak ada lah untuk year 4. So, sebab tu saya cakap kalau dinaik nanti 20,600 tetap tolak 10,600. Goodwill sekali je kira. Dia tak akan berubah until subsidiary has been disposed atau goodwill itu sendiri jadi zero bila impact. Ya, maksudnya goodwill year 1 itulah dia, year 2 itu juga amount goodwill, tapi tolak impairment lah. Impairment berubahlah from year to year. Tapi initial goodwill yang 800 ni dengan the whole figure ni takkan berubah. Unless kalau ada error, unless kalau ada pending in valuation. Tapi the general understanding dia tak berubah. Understand? So dia bukan nanti bila end year 5, goodwill lain pula kira, no. Ya, and year 6 goodwill pun lain, no. Okay? Sampailah di dispose itu juga goodwill dia. So this one 0 multiply with 100%, tak ada. This one will be 54, 100. Okay. Then we know that in the actual situation, normally parents' capital not always hold 100%. Normally going to be less than 100%. And the minority percentage, we call them as a non-controlling interest. Simple to understand because parent company is the controlling party or controlling interest, parent, because they obtain control over subsidiary. So the other party with less than 50% normally, they are non-controlling party or non-controlling interest. Okay. So what are non-controlling interest? We hold 80%, only 80%, and the non-controlling interest will be the rest of 20%. Yeah, non-controlling interest ni dia sebenarnya shareholder juga. Dia equity holder juga, tapi dia small, with a small percentage. Yang big percentage tu will be the parent company. Okay. Dia pun kita akan record di bawah equity nanti. So tak perlu lagi prepare full console, dia buat mid-year acquisition. So this is when acquisition of subsidiary is not always at the beginning of the year or macam tadi end of the year. Yang tadi memang untuk example je lah. But what if the acquisition of subsidiary will be is within the accounting period? Ya, maksudnya dekat sini, based on this timeline pun dah cukup. This is a financial year, but the acquisition will be held at this point. Maksudnya ini date of acquisition. Dan dekat sini baru ada goodwill. The main issue is on the retained earnings. Equity tak ada masalah. In your case, equity tak berubah. Share capital tak berubah. So you don't have to worry. Because maksudnya untuk share capital, kalau dibagi kat sini 100K, dekat hujung pun dia tetap 100K. 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 But and the question sometimes give you several variation of answer. But macam mana pun, sama ada dia bagi retain earnings brought forward, brought down. Ambil dekat sini 50k. Dia bagi profit for the year, for example 12k. And dia bagi retain earnings carry down. Ni profit for the year, profit or loss and OCI 12k, and dia bagi retain earnings and OCI carry down, for example in this case 62k. Isu dia, you nak cari retain earnings at this point, at the date of acquisition, untuk cari goodwill. Sebab you tak boleh pakai yang 62 at the end. This one is not the date of acquisition. This is also not the date of acquisition. So this one. So you need to base on time proportion, on monthly basis. Not that difficult, but you need to understand that it must be retained earnings and reserve balance lah dekat sini. So in this case, yang I bagi simple ni, dia acquire mid-year kan, 6/12. Maksudnya 6/12, dia bukannya subsidiary, and another 6/12, dia subsidiary. Then you need to have retained earnings up to this point. So contohlah, kalau masih cari goodwill, I buat terus dekat computation consideration transferred, NCI, and then less fair value net asset. So share capital, kita ambil yang tadi tu je 100k. Tapi retain earnings, masa cari goodwill, this is goodwill computation, you kena buat working lah. 50 plus profit for dia 12 kan? Multiply by 6/12. Faham? So kita dapat profit at the point. Apa dia? Tanya I terus lah. FVNA, Fair Value Net Asset. Itulah bila lama sangat I buat benda ni kan, sampai terlupa yang you all first time tengok. Patutnya betul lah you tanya. Dia fair value of yang atas tu, fair value of assets and liabilities assumed. Tetapi sebenarnya assets held and liabilities assumed tu adalah net asset. Asset tolak liability, net asset lah. This one fair value net asset. So in this case, retain earnings untuk goodwill, dia jadi berapa? 56 lah. Ya, maksudnya total will be 100 plus 56k untuk fair value net asset. Faham? So itu dia punya understanding. Then barulah kita buat exercise ni. Lepas buat exercise ni, baru kita break sekejap lah. Dia masih lagi, dia pakai Portes and Sanus. Still the same. Cuma sekarang ni, on 1st April year 4, Portes purchase 80% holding in Sanus for 13.8 million cash. And Sanus total comprehensive income for the year ended was 2 million. Yeah, for the year ended maksudnya tahun tu lah, accruing evenly over the year. Sanus did not pay any dividend in the year. Tak ada reflect on profit lah. The non-controlling interest to be valued at fair value. Nanti kita akan tengok non-controlling interest boleh measure at fair value and based on net asset of subsidiary. Asset liability of subsidiary, but in this question at fair value kita follow dulu, ya, at 3.2 million. Okay, satu-satu macam biasa, they obtain control and then this one tetap tambah, and the statement PPE, investment masih lagi masuk dalam goodwill, 13.8 million, tapi this 13.8 million was on 1st April year 4. Dia dah bukan on 31st December year 4 macam tadi. So dia acquire 1st April year 4, 13.8 million. Inventory tambah trade receivable cash. Okay, share capital parents only in the console, and this one masuk goodwill computation. So 2,400. Okay. Reserve working. Yeah, reserve bila dah standard question, yeah, standard final exam question, you kena buat separate working. 15, 54, 100 and 10, 600 kena masuk dalam ni. Macam tadi lah. Tapi tadi terus tolak 10, 600 in this question no, because they acquired in within the accounting period. Okay. So then long-term borrowing plus, and this one also plus. Remember, in the final exam, other than to focus on working, kalau boleh transfer ni dulu dekat you punya working section, tambah dulu. Yeah, remember like I said, question 31, 32 lah. Finish all the process. InsyaAllah, if you finish all the process, including interpretation of financial statement, nanti bila I buat, kita discuss, bila you discuss sampai conclusion, walaupun you rasa point you tak cukup, tapi buat sampai conclusion. Then you need to really timing lah dekat situ. Contohnya, you buat 5 minutes for conclusion. Now tinggal 5 minutes je. Another 2 point tak sempat buat. Tak apa. Go for conclusion. Yeah, better you finish the conclusion dengan markah lah. Yeah, similar to this one. Habiskan proses dia. Because untuk transfer ada markah setengah. Ya, bayangkan you transfer habis proses dan banyak treatment yang betul, lagi banyak markah. Ya, publish pun macam tu. So similar to this one, bila dah transfer everything, okay, baru kita finalize inilah untuk additional information. 1st April year 4, 13.8 million cash kita dah buat tadi kan. Ini total comprehensive income for the year ended 2 million. So macam mana nak dapat retained earnings at acquisition? Reserve. Macam mana nak buat working? Information retained earnings kita ada dua. Reserve lah reserve sebab retained earnings saja. Retained earnings and OCI dua-dua tu reserve. Dia combine dalam soalan ni. But it doesn't matter. Ni untuk ni je. Kita ada 10.6 million. Dan kita ada profit for the year. Total comprehensive income for the year 2 million. Macam mana you nak dapat retained earning on 1st April year 4? Tolak, bagus. So normally we can be revealed if you draw the timeline. Kalau rasa susah nak tengok, kita buat timeline lah. Selalu discussion, kita buat je timeline, tak ada masalah. So we know that from this one will be the reserve for the year, and total comprehensive income for the year will be 2 million. And then they acquired here on 1st April year 4. So macam mana nak dapat retained earnings dekat reserve balance dekat sini? So 10.6 minus yang ini 3/12 kan? Yang ini 9/12. Maksudnya 10.6 minus 2 million multiply with 9/12. So you exclude the 9/12 kat sini. Sebab dia masa ni subsidiary. So the working will be like this. Kat reserve ni. 10.6 minus 2 million multiplied with 9/12. Berapa? 10.10 pula. Berapa? 9.8 point. Jadi huh? 9.1. Agree? Sama? So then 9.1, 11.5, 11,500. Belum lagi non-controlling interest kena letak. Sepatutnya letak terus tadi. Terlepas. Betul 11,500 ni tak berubah. Cuma untuk cari goodwill. Non-controlling interest given at fair value berapa tadi? Semua in thousand ya. 3.2 million. Okay. So 13,800 plus 3.2, 17. 17 minus 11,500. Berapa goodwill? Then 5500. Okay, and not to forget, macam mana pun ni reserve at acquisition. Goodwill kan? Semua item dekat goodwill ni semua at acquisition. Meaning that reserve at acquisition and to complete consolidated reserve working. So just refer in the working to reserve. Berapa tadi? 9,100. Okay. So nampak ya, sebenarnya bila you tolak kan, 10,600 tolak 9,100 berapa? 1,500. Sebenarnya 1,500 ialah yang 2 million multiply with 9/12 masa dia dah jadi subsidiary. Yang ni lah. Ni timeline ni. Yang ini tak masuk sebab ini masuk goodwill up to this point because dia belum jadi subsidiary. Tapi post profit as a subsidiary akan tinggal lah as post acquisition reserve. Akan channel to parent and non-controlling interest. Okay. So now, when you have post profit, yang ini post reserve ya. Post reserve, 80% you will transfer to Potes and 20% you will transfer to non-controlling interest because Potes acquired Sanus for 80%, not 100%. So in this case, Sanus company 1,500 multiply with 80%. 1,200 ya. So this one with 55,300. Yang ini buat sampai balancing figure. Sambil break 5 minit. Saya suka bagi break sambil bagi kerja. So non-controlling interest not to forget sebab non-controlling interest adalah dia adalah shareholder which is outside the group. Dia adalah equity and it need to be accounted as well sebab part of the shareholder of the group, subsidiary dia jadi group. NCI at acquisition dia bagi tadi 3.2 million. Yang ini in working tu maksudnya in goodwill computation, copy je. Macam mana you copy reserve at acquisition ke working retained earning atau reserve tadi? Yang ini. Macam mana you copy 9.1 ni, you masukkan dalam ni. Macam tu jugalah you copy NCI at acquisition, masukkan dalam NCI working. Yang tu benda yang tetap, we will not change, teruskan. Okay. So what left in this computation will be profit ni. 80% has been transferred to parent and another 20% will go to NCI. Akan masuk kat sini. Right? So here 1,500 multiply with 20%, 300. So for this one, transfer everything. Yang ini kita nak ada careless. So you need to transfer, like I said just now, PPE, parent subsidiary, goodwill, dah ada working tadi. Inventory, parent subsidiary, trade receivable sama. Share capital, parents only, reserve working dah settle, non-controllers working dah settle. So this one, yang ini pun parent plus subsidiary. So make sure that all of you get the balancing figure and it is correct, then we can move to another question. Yes? Oh, boleh. 5 minit Tayo juga lagi. Balance berapa? Siapa yang ada masalah? Tak dapat 88,600? Anything? Yeah. Good. Any question? Tak ada? So done for introduction to groups. So now we move to more more complex as compared to the basic and consolidated statement of financial position. So we need to look at to explain why necessary to eliminate intra-group transaction. So when there is a transaction between parent and subsidiary, especially when that transaction involve a profit figure, and because when you combine accounts, you cannot, the group cannot recognize profit on its own transaction, then it needs to be eliminated. Okay, and there will be intra-group balance, receivable and payable for both need to be eliminated as well, because you cannot, after consolidation, so we cannot assume that, or we cannot consider that parent or group will owe themselves. So that's why receivable parent and subsidiary and payable parent and subsidiary amongst them need to be eliminated. Okay. And explain why it is necessary to use fair value for the consideration of investment in subsidiary together with the fair value of subsidiary identifiable asset and liability. So this is the requirement of the fair value. The accounting standard itself requires company to measure fair value from the date of acquisition. So they will explain why. And you need to distinguish goodwill and other intangible asset. Mostly other intangible asset will be covered in IAS 38, but not goodwill. Goodwill is an intangible asset, but not under IAS 38. They are bawah IFRS 3. Or business combination lah, consolidated financial statement. Describe the subsequent accounting treatment of intangible asset. I suppose this is focused on goodwill because subsequent accounting will be based on impairment of goodwill. Okay. Indicate why the value of purchase consideration for investment may be less than fair value of acquired identifiable net asset. Because normally, let's say, when you want to sell your shares, you will look at the value of your company. If the value of the company 100 million, for example, you will sell more than 100 million. So you want profit from that. Okay, so the purchaser tu akan bayar lebih daripada 100 million. Itu yang goodwill. But then there will be certain issue bila when you want to sell your shares, maksudnya you want to immediately. You want to sell your shares immediately. Because normally it will, if it's more than market price, it will take time to find a buyer. Okay, so if you sell cheap, senanglah cerita. You jual murah from its value, then you get fast buyer. Yeah, so easy to get buyer. So itu contoh yang akan ada negative goodwill. Masa you kira goodwill, dia ada negative figure. So nanti kita akan tengok. And prepare console financial position for a simple group. And pre and post execution profit and also NCI. Explain account of other component of equity, reserve, other reserve, now you call it other component of equity. This sebenarnya sama je, other reserve. Other than retained earnings basically. Share premium pun adalah one of the other component of equity. Okay. Sebab dia ada equity, share, which is share capital, dia ada equity retained earning. Retained earnings pun equity, and then other than that will be other component of equity. Ini pun reserve juga, tapi other reserve, but they call it OCE now. Yeah. So this is also the things that you need to understand. An account for the effect financial statement of intra-group trading. So similar of intra-group balance, intra-group transaction is coming from intra-group trading. So this is also the things that you need to be eliminated later on. And then when subsidiary company carry the asset, for example, at cost. Contohlah, ini building subsidiary, they carry at cost 100 million. They depreciate based on cost, let's say 2 million. Yeah. But when parent company find the fair value of this building, for example, 150 million, then depreciation will change. So in the group point of view, depreciation will increase. Kan? Sebab dia dah the group value at 150 million. So that increase need to be accounted in the financial statement. Okay, ini maksudnya depreciating and non-depreciating non-current asset. Non-depreciating tak ada masalah. Fair value adjustment on inventory, monetary liabilities, so intra-group balance. Asset and liability not included in the subsidiary own statement of financial position, including contingent asset and contingent liability. Not so much on contingent asset, but contingent liability later on, you will get surprised. There are the contingent liability that will be recognized in the group accounts. Contohnya, consideration transfer selalunya cash kan? Cash, bayar cash. Company itu tak confident whether subsidiary is in a good performance atau maintain its performance or not. And then the previous shareholder, parent company like in this case, saying that yes, if it's kalau you confident if it's a good performance, if the performance is good, then I will pay another 2 million after 2 years. Other than cash yang dia dah bayar tu, dia will add another amount if the performance of the company is good. Dia ada if tu kan, bila ada if dekat sini, dia dah jadi contingent. Apa definition contingent liabilities? Yeah, occurrence or non-occurrence of uncertain future event. Maksudnya only can be confirmed in the future. Itu maksudnya sekarang ni, masa dia deal ni, yang kata performance of the subsidiary is good, they have no idea. If the performance is good, then they will add another 2 million. So maksudnya they need to wait for another 2 years to confirm. So itu maksudnya only can be confirmed in the future. Itu ayat yang I selalu bagi the just general terms for better understanding. Ya, tapi betul-betul definition yang itulah. One or more uncertain future event which occurrence or non-occurrence of inilah kan in the future. And then goodwill impairment. Banyak learning outcome dalam. And then accounting treatment selalunya proses consolidated goodwill, process to prepare consolidated financial statement. So approach, basic procedure, standard procedure, I'm going to go into calculation. Ya, tak perlu dah. Tak perlu untuk go for reading yang tu kemudian baru boleh baca. Faham the process? InsyaAllah yang tadi tu kita resolve sekali. Requirement, prepare, console, financial. Ada siapa di kelas pukul 2? Semua tak ada Prepare, console, statement of financial position of the Sing Group as at 31st March year 5. So look at the information given. This one is basic goodwill calculation. Actually, it is still the same. Kita brief je tengok ni Sing company gain control wing on 31st March year 5, acquire 80% ordinary share. Bezanya yang dekat basic tadi, group structure dia 100% acquired. This one will be 80%. And then the draft statement of financial position of each company were as follows: Sing company and Wing company, they just separate the amount. Dia bukan buat side by side, atas dengan bawah. And fair value non-controlling interest 12,500. So dia nak calculate, prepare console kan. Kita resolve je lah satu-satu. One will be investment non-current asset, tak ada Maksudnya ada non-current asset, dia cuma ada this one je investment. Betul ke soalan ni? Betul lah, dua-dua ada current asset je. So maksudnya yang ini will be in the goodwill computation, investment in wing, and this one current asset tambah dengan subsidiary nanti. Ordinary share ni parent Sing company parent. So this one masuk dekat console, return earnings working, tapi tak perlu return earnings memang ni je sebab dia acquire at the year end. Sebab return earning dalam goodwill sama macam soalan tadi. This one will be included in the goodwill. This is also will be included in the goodwill. Yang ini tadi parent tambah subsidiary current asset. Okay. And sepatutnya tak ada big issue lah ni Ini just buat je nanti, boleh? For me this is repeating. This one. Fair value of consideration transferred. So beside cash, there will be other type of consideration transferred can be offered by the parent company in order to purchase the shares in subsidiary company. Okay. The most common will be cash, and the other three types, normally there are tiga, when parent company issue shares as exchange of consideration. Maksudnya, mula-mula contohlah, you all semua ni shareholder of subsidiary sekarang ni, and then I need to purchase shares from you, so I bagi cash for certain amount, and it is insufficient to cover the value of consideration transferred, and then I offer you my share. Contohlah, dia 10 million. I ada 5 million and I give you cash 5 million and another 5 million convert into share, then you become my shareholder. Nampak tak? Mula-mula jadi shareholder subsidiary. Tapi sebab parent company offer shares from parent, so dia jadi shareholder of parent company pula. And most probably dia jadi non-controlling interest lah. Okay? So and then this is the general, I suppose, transferred at the date of acquisition, the asset transferred by the acquirer, the liabilities incurred by the acquirer, and equity interest issued by the parent. Okay? Asset transfer tu contohnya cash lah. Liabilities incurred ni kat sini. Dia obligation. Okay. Yang ini share. Yang ni saya bagi tahu tadi. Equity shares. Okay. But if there is a legal fee, transaction cost, dia tak masuk dalam consideration transfer, dia terus record dekat profit or loss. Expense of. Okay. So I give you a simple scenario. Contohnya, value that we need to achieve consideration transferred, is 100 million. Dah ada cash, cash transfer dekat sini, let's say, kita buat major proportion lah, 60 million cash. Okay, 60 million cash. Supposedly ini yang kita agree, 100 million cash to be transferred. But they don't have enough cash. And then They say that some of the portion dia hutang. They say out of 60 million, 30 million will be paid in the year 1. This is year 0. This is the date of acquisition. Year 1 or year 2, it doesn't matter. Dia akan bayar another 30 million. So tapi dia nak cash 30 million kan, 40 million. Untuk consideration transfer, date of acquisition, you tak boleh value at 30 million. You akan value at present value of 30 million. Tak kisah discounted factor 10%, 1 over 1.1 power of 1. Macam tu je lah. Faham? So time value of money is significant. It's material. So but the shareholder said, how about another 10 million? Itu yang last kali contingent consideration. Let's say I will pay another condition in example at 10 million if profit increase by 15% after 2 years. So 60 million dah bayar, 30 million bayar end of year 1, so 90 million. Tapi untuk record, tak boleh record 30 million, kena record present value of the 30 million. Nanti kita akan buat kat bawah tu ada illustration. And the other one, another 10 million, dia kata after 2 years, if the profit increase by 15%, then I will add another 10 million. But this one, sebab dia contingent consideration, dia ada ni, if ni. So dia tak boleh measure at present value, sebab dia ada faktor yang lain. Yang ini dia direct, ini lebih kepada certain. Yang ini more uncertain. So, but they need to measure at fair value. And normally it will be given. Contohlah, it will be given the question. Dia kata fair value will be 3 million. So maksudnya consideration transferred yang ada dalam soalan, yang ada dalam ni, dia bukan 100 million lah. 100 million cash outflow yang akan dia bagi. So dia cash 60 million. Deferred consideration 30 million multiplied with 1.1 a power of 1, 10%. And then contingent consideration 3 million. Dan berapa ni? 30 million 1 over 1.1 the power of 10% ni. Cepat sikit. Berapa? 27. Thank you. Kita ambil 27 je lah. Nak juga 0.3 boleh 0.3. Dah letih kira kan. $90.3 million. Teringat pula yang volleyball team tu kan, yang perempuan ni kena tampar dengan coach dia. Tapi tak macam tu dah, tak ada macam tu dah. I gurau je tadi. Viral kan dalam record ni kan. Tapi parents dia tak report pun. Macam dia macam kenal each other, I don't know. Janganlah, tapi teringat. Tak nak garang-garang. So come back to this one. So it's bukan 100 million lah. Dia akan jadi 100 million bila ni end of year 1, 30 million. And then if the profit increase by 15%, dia bayar another 10 million. Masa realize nanti, itu later lah in the future. Yeah. Sebab contingent consideration ni dia boleh remeasure. Apa deferred consideration you akan buat apa? Masa end of year 1. You akan compound balik, dia akan ada interest. Illustration 1 will explain. A liability 100,000 is to be paid in 2 years' time. Discount rate 6%. what amount should the liability be recorded? Maksudnya contingent consideration akan 100,000 multiplied by 1 over 1.06, 6% a power of 2 sebab 2 tahun kan. Betul? So sekarang ni, kita ambil ni 1st January year 1 je lah, senang. 1st January year 1, you dah record dah consideration, deferred consideration at 89,000. Tapi masa 31st December year 1, balance carry down, takkan 89,000 juga. Mesti dia meningkat kan? So maksudnya, dia akan ada interest kat sini. Interest expense ataupun finance cost. Sama je lah dua tu. 89,000 multiplied by 6%. Berapa? Adam Lukman ni? Adam Lukman siapa? 5340. So maksudnya ni ada 94340. And then masa realize 31 December year 2, dia mesti jadi 100,000 balik. Tapi to prove mungkin decimal point lah. There will be another interest expense of 94340 multiplied by 6%. Aisyah berapa? Yang kita ada buat salah ni, ingat cepatlah nama dia. 5604. Oh. 4.4. 660.4. Ada yang cakap amount lain lagi tak? 0.4 Kita skip yang 0.4 tu lah. So sepatutnya dua ni kan dia tambah jadi 100,000. Kalau 0.4 tu dah tak ada pula 0.4 ke tak ada lah kat sini. So kita thank you. So itu maksudnya sebab sometimes dia macam ni. Soalan dia takkan end at the date of acquisition. Yang ini memanglah 89,000. Tapi kalau soalan tu financial position tapi end at 31 December year 2, maksudnya you kena tambah finance cost dekat retained earnings tu dua-dua ni. This one. Tapi kalau soalan tu end at 31 December year 1, adalah interest expense dekat retained earning 5340. Yeah? Tapi dekat statement of financial position you, deferred consideration jadilah 94340. Dia tak bolehlah maintain 89,000 sebab ini different date, different timeline, different present value. Itu you kena consider. Yeah, complicated but still understandable. So 10 minit lagi ada consideration ni. Nah ini jadi you punya homework je lah. Sebab dia ada cash, dia ada deferred consideration, ada contingent, ada transaction cost. Syukurlah kot yang ni kita sambung esok. So satu homework je sekolah ni. Sebab dia kena habiskan semua soalan dulu. And then baru you tengok practice revision kit. So that's all for now. Sedang dengan tasbih kifarah sudah. Subhanallah wa bihamdihi. Thank you so much. Assalamualaikum.